now for some business news, and we'll start with a look at electric vehicle maker Tesla and its strategy of choosing market share over profits, a move that is worrying shareholders in Elon Musk's company. Charles Belgrand is on set to tell us more. Good morning, Charles.
Good morning, Allison. That's right. And the way that Tesla is trying to get more market share is by slashing prices, which it has done repeatedly this year. This all came to the fore as Tesla shared an update on the company for the first quarter of 2023, and Musk spoke during an earnings call. Now, this so-called price war, as some people are calling it, is happening as there is increased competition in the electric vehicle sector, and as prospective buyers are facing higher borrowing costs because of higher interest rates. Tesla has warned investors prices would continue to, quote, evolve. The brand is known for its profitability, which has made it a darling of investors, but Musk defended the strategy, saying it would renew with profits in the long run with subscription payments, for instance, with automated driving features, which would allow car owners to operate their vehicles as robo-taxis when they aren't using them. Now, in the present day, though, Tesla's revenue is on the rise thanks to increased sales. It's up 24%, as you can see, from this time last year to $23.3 billion. But its bottom line, its profits, are down 24% annually and at $2.5 billion. Let's see what the reaction to this has been on the stock market. And after hours trading, Tesla's share price fell 6% at $169 a share, this adding to an already existing 10% decline since the start of the month. And let's also take a look at what's happening on Asian markets this Thursday. We're seeing mixed trading across the region, with the Nikkei in Tokyo up 0.1% as the country saw a record trade deficit for fiscal year 2022. Elsewhere, the Hang Seng in Hong Kong down just 0.1%, and the Shanghai Composite down just under 0.5%. Moving on now to the debt limit debate in the United States. Republican Speaker of the House Kevin McCarthy presented a package on Wednesday that would raise the $31 trillion debt ceiling and allow the government to keep paying its bills. GOP's plan would raise the limit by $1.5 billion into next year and would impose a long list of his party's policies, for instance, new spending caps and work requirements for recipients of government aid, something that won't pass muster with the White House or the Democrat-controlled Senate. Let's listen in to Speaker McCarthy and to President Joe Biden's response later on.
These spending limits are not draconian. They're responsible. Federal spending exploded in the past 2 years when Democrats controlled all, and that doesn't include the trillions of COVID-era spending. But limited government spending will reduce inflation and restore fiscal discipline in Washington.
Folks, that's the MAGA economic agenda. Spending cuts for working and middle-class folks, Americans, and tax cuts for those at the top of the pile. It's not about fiscal discipline. It's about cutting benefits for folks that don't seem to care much about.
Well, many of us have experienced this. There is such a thing as too much marijuana, but in cannabis producers on the west coast of the United States, they're feeling this quite acutely these days with an oversupply to the market, especially because they're unable to sell across state lines, which means their unsold stock is often left unused, which is very sad. As Leo McGuinn reports, they're hoping the Biden administration might step in and help.
Cannabis farms are a common sight on the west coast of the United States. This one, in Washington, is one of over 1,000 in the state alone. Alongside Colorado, Washington was the first state to legalize the drug in the country. Oregon followed suit just 3 years later. For a time, those growing marijuana were living the high life, but now they're watching their business plans go up in smoke amid an oversaturated market. Isaac Foster is the founder of a cannabis market in Portland and has a blunt assessment of the situation.
Oversupply, I would say, is the key word for the state of the cannabis market in Oregon. You have a situation where, wonderful experiment, Oregon, unlike other states, had a system of basically unlimited licenses. which encouraged a large number of people to get into the cultivation side.
Another problem, the inability to sell on any surplus. It stays trapped within the state's borders due to the federal ban on marijuana. Some are holding out hope that the Biden administration will approve marijuana trade among states that have regulated it.
And as we're just sitting here kind of idling our capacity, if you will, waiting for our laws to change so we can get ourselves positioned to play, to participate in the market at large.
For some growers, it's all gone to pot, and they're getting out while they can.
And yeah, I'm selling it now, and I'm gonna, take a loss. But you gotta know when you cut your losses.
Combined U.S. medical and recreational cannabis sales could reach $33 billion by the end of 2023 and over $50 billion in just 5 years' time.
I spotted 4 weed puns in that package.
Yeah, I know Leo had a bit of fun with that one, and so did we. Charles, thank you very much for that business update. And we're